March. Is this March 2.0? Not as bad, but that drop on the S&P, worst we've seen in a month. Jonathan, we saw some serious weakness across global equity markets yesterday.
FTSE 100 opening dead flat at the moment, about 10 seconds into the session. If you look at foreign exchange this morning, sterling also dead flat. Into the bond market we go, where that bid that came into this market yesterday has basically stayed in there, particularly on treasuries. Just a slight move higher on yields over in Germany. France in the belly of the curve. The 10-year German bund yield down to negative 57 basis points, up almost 1 basis point on the session. Over in Spain, we opened firmer by about 0.7%. The CAC 40 in Paris, France, up by not even 0.1%. The story of the last 24 hours pretty clear. Through the weekend, into this week, virus cases surging in Europe, and governments are running out of options to fight the pandemic. That means the drastic step of a second lockdown is back on the agenda. Earlier on the show today, Nevada CEO Vas Narasimhan told us he is cautiously optimistic on Europe's pandemic management, but warned against rushing a vaccine.
I understand there's a huge, I think, allure of rushing out with a vaccine. But the other thing we have to remember is when we go too fast, we can also disrupt the ability of clinical trials to occur for even better vaccines down the line. So we've got to strike this balance of making sure that we don't undermine the larger scale effort in our rush to get something out.
Joining us now is Bloomberg's Maria Tadeo from Brussels. Maria, I think the new news around this story is not the caseload, it's not the restrictions, it's about how people in these countries, in Italy and elsewhere, are responding to the government's efforts.
That's right, and it's that social anger that we are seeing, and the social context really matters, because the reality is, Jonathan, you know this well, the rules only work if people are willing to respect them, and the social context has changed. Back in March, people were told you need to stay at home. Nobody could have predicted that coronavirus was going to happen. We just have no other option. That has changed now. For weeks, we were told, and again, you know this very well because we've heard this repeatedly from governments, that there would be no second lockdown, that we were ready, that we were good at testing, that hospitals were ready for this, and that we would not go back to March. The reality is that on the ground, the situation is looking a lot like March. When you overpromise, you underdeliver, and you also whiplash people on a weekly basis, that's what you get. As the protest that you had yesterday in Italy, you had it in Naples on Friday, you've had it in France, you've had it in Spain, and it really matters, because the only way this is going to work or function is if people are willing to take that pain and they're willing to respect those rules.
There's a lot of COVID fatigue, isn't there, Maria, going around in Europe? What's happening in France? They're looking to double down and have a bit harsher restrictions as early as this weekend.
Yes, and look, this could be problematic for Emmanuel Macron, because he had been very outspoken on the idea that France would not be halted for a second time, that he was not a fan of general lockdowns. But we do hear a lot of speculation that more restrictions are about to come this week. You know, potentially that curfew be extended now to something that looks like 7 p.m., 8 p.m. Ultimately, at that point, you do ask your question, or that question of, are we actually in a lockdown if you go from work to home and you have no hospitality, no social life, and over the weekend because you're not really able to do anything, but also what kind of impact is this going to have on the economy on a longer term? And that takes us to the question, of course, that we've been asking ourselves. This is not just about 1 or 2 week measures. These are more structural and could have more lasting impact on the economy and do more damage to an economy that's already hurting.
Maria, thank you. Great work as always. Maria Tadeo there over in Brussels on the tension, the difficulties the continent is having at the moment. I want to get to the price action of the moment. 3-4 minutes into the session, equities opening just a little bit firmer on the DAX. The outperformance coming from the IBEX over in Spain off the back of a huge move in Santander. That stock doing nicely, surging on better than expected 3Q earnings. We caught up with the CFO just moments ago on this program. The Stock 600 more broadly flat after yesterday's decline. Almost every single sector on the Stock 600 yesterday trading in negative territory. A similar story playing out in the United States as well. 1 week away from that election. Joining us now, I'm pleased to say, is Shanti Kellerman, Investment Director at Brown Shipley. Shanti, fantastic to get you on the show with us. Let's just talk about the earnings so far in Europe. A tale of two companies, I guess. SAP on the one side to kick things off Monday, ugly. Santander on the other, much better. What are you looking for in the numbers?
So we look for companies that can deliver.
Morning, everybody. I'm placing a stop on profit for euro. As you can see from our previous positions on ticker, we have open position at 118.58. So I decided to sell if the price will reach 118.28. Okay, so I'm placing a stop on profit for this position at 118.28.
Lockdowns and government responses.
Shanti, as Jonathan says, Santander doing very nicely this morning. So is HSBC. You sold your position in European banks over the summer. Is it because of these dividends? Just because of this low rate environment? What would take you to get back into financials?
So financials, there is a lot of value there. So if you look at things like price to book and price to earnings, they do look attractive. But I think for value to work, you need some sort of a catalyst. And when you look at the banking sector, I think there's just a lot of headwinds that are coming. For example, we're likely to have low interest rates for the foreseeable future. That's higher interest rates are something that could benefit banks. We don't know the full extent of all the loan losses. And we also have incredibly tighter regulations on the banking sector. That's something that's not going to change in the near future. So while I think there is value there, it's hard to see a catalyst to make that sector really re-rate.
Shanti, Santander up about 3.5% over in Spain. We caught up with the CFO about 10 minutes ago who said that weighing on the sector right now, the biggest issue weighing on this sector was their inability to pay out dividends. Shanti, does that resonate with you?
So dividends are important to a lot of our clients. There are a lot of investors that rely on them. If you were going to be very sort of approach it from an economist angle, you'd say dividends are unimportant because you would just sell bits of the stock when you wanted income. But I think the signaling is what's important psychologically that shows that the companies are in a strong enough capital position that they can commit to making those payments. I think, banks will look to return to dividends as soon as they can. And if we have things like, European debt issuance to take some of the tail risk out of Europe breaking up, if we can get through Brexit, I think that will give banks a better argument to say that they can reduce some of their capital ratios a bit and they don't need to hoard so much capital. They can give some of that to shareholders as dividends. But those are still yet to happen. We think they will happen. We think there'll be some sort of Brexit deal. We think there'll be European bond issuance. But we need to see it happen before we can restart a lot of those payments.
Shanti, thank you. Appreciate your time this morning. My apologies. Shanti Kellerman there, Investment Director at Brown Shipley. Some communication issues here. Anne-Marie and I in different rooms. I'll get to the HSBC
we're socially
delivering the profit beat. We are on a delay as well. It's exhausting.
Yeah, on a delay. We're in the same building,
Let me just deal with this. Let me get to the price action of the moment. About 8 minutes into the session. Equities up. HSBC rallying, up by about 5%. Santander up by 4%. BP up by 2.28%. That's the story of the movers right now. The equity market bouncing back just a little bit, 1 week out from a general election in the United States of America. Up next, more on the European earnings. Alongside Anne-Marie Hordern, I'm Jonathan Ferro. This is Bloomberg.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
We're very liquid, so we'll have the conversations with the Bank of England in the latter part of this year, and then, yeah, we will address our policy around returning capital to shareholders at our year-end results.
We also want to reward our investors, and we have accrued for that. And clearly, we can pay out dividends, but of course, we are following the guideline of ECB, and therefore we have refrained from deciding about it before 1st of January.
We are a bank that likes to give out dividends. We have to think about the stakeholders in society, and people have invested in us, so we want to give back dividends. But there's still uncertainties, and therefore we're following what the authorities are saying, and we're following the economic development from the pandemic.
Shareholders comes in and goes, and the one that have been staying around for 9 years do remember that they got 5 francs of dividends, the other less so.
I think that banks can use some of this excess capital they have to remunerate shareholders, because otherwise banks are going to have a very difficult task in convincing investors that they should come back to investing on banks if they cannot get any dividend out of it.
Banking bosses are lobbying for the return of the dividend. HSBC also out today, signalling a possible return of a, quote, conservative dividend. 12 minutes into the session, here's the price action across Europe. The FTSE shaping up as follows. Here in London on the FTSE 100, we are down by 10, 11 points, off by 0.2%. We roll over on a DAX once again. We just can't keep our head above water here. We're down 32, off by 1/3%. The CAC 40 in Paris, France, down by 0.6%. That's the story for US futures. A real mild bounce back, totally unchanged 1 week out from the election. A huge day in European earnings. HSBC beats, BP narrowly avoids a quarterly loss, Santander rebounds from its worst ever quarter, and Novartis raises its forecast. Back with us is Shanti Kellerman, Investment Director of Brown Shipley. Shanti, looking out through Europe through Q4, we had SAP downgrade their guidance for the year ahead through 2020. And I just wonder from your perspective, Shanti, how difficult it is right now to put together any kind of outlook when you look at what's playing out on the continent.
So you can put together an outlook. I think it's, can you forecast the next 3 months? That's always incredibly difficult. What we look for are who are going to be the long-term structural winners, companies that can generate returns on equity of 10 to 15% per year. And a lot of that is fairly clear. You see a lot of the names in technology that are still doing quite well. You see a lot of the healthcare companies continuing to deliver earnings, companies in renewable energy, semiconductors. And a lot of those companies, their outlook, thinking 2-3 years down the line, is fairly unchanged.
Shanti, what's so interesting is that yesterday it was a tech giant that led the drop in stocks, while today we have financials and big oil doing well when you look at the individual movers. You actually like big oil. It's been such an unloved sector. Why do you like it, and how do you think more investors could be attracted to it?
Well, just to correct, we do hold some shares in BP and Shell in our portfolios, but long term, we think oil will be in decline, and we think those companies are going to have to restructure. So I wouldn't say we're positive on oil in the long run. I think short term, it's probably undervalued just in terms of where the price is and demand collapsing. But if you look at longer term, things like battery technology are probably going to replace a lot of what's happening. And you're seeing companies like BP, which narrowly avoided a loss, trying to restructure their portfolios to get more into that space. Those companies are also planning to do lots of divestments. They're planning to do lots of buybacks. They're probably going to shrink dramatically, but hopefully they can do so in a way that works for investors as well by returning capital and becoming more sustainable companies.
And you're still even happy with them after they all had to cut their dividend? I mean, for oil majors, the dividend is so sacrosanct. Without that, you don't really want to own them.
So a lot of companies cut their dividends. We looked at all of our stocks after the pandemic happened and went through the list. And one of the things we wanted to look at is, can they survive? Do they have the capital basis to get through it? And a lot of the oil companies, they do have issues, but they are starting to address them. And they are, we didn't think that they would cease paying dividends forever. You're seeing a very strong intent to return to that. It was probably the right thing to do at the time because in March and April, we didn't know what the rest of the year would bring. In some ways, we've probably been able to adapt our economy and our society maybe better than we would have expected, even though we still have issues that we're dealing with.
Across Europe this morning, Shanti, we're seeing fresh restrictions and potentially France even going to go harder on those restrictions into the weekend. You own LVMH, and I bring this up because that's really a play on a K-shaped recovery. Do you still see that K-shaped recovery taking place, especially as we have the resurgence of coronavirus cases here in Europe?
So one of the things we see, if you look at the data that's come out, things like retail sales have actually held up pretty well. Or if you look at things like home buying, people moving houses. And whilst unemployment is up, there also is a large percentage of the population that, continues to be employed, continues to earn income. So the luxury sector is a play on those people continuing to have cash and continuing to spend. It's not one of our top picks by any means, but it is a stock that we hold, and they are a leader in that sector. Our main focuses in terms of the sectors that we really like are healthcare and technology, and those are things that we have represented across all of our portfolios.
Shanti, appreciate your time this morning. Thanks for dropping by to catch up with us. Shanti Kellerman there, Investment Director at Brown Shipley. Your price action as follows. Equities not bouncing back this morning in Europe, and I think that's the story. We're negative about 0.1% on a stock 600. With your Bloomberg Business Flash, here's Laura Wright.
Thanks, John. Jack Ma is poised to become the world's 11th richest person. That's after Ant Group priced the shares for its initial public offering. Ma's stake in the fintech giant will boost his overall wealth above $70 billion. That's more than Oracle's Larry Ellison and the world's richest woman, L'Oreal heiress Françoise Bettencourt-Meyer. Las Vegas Sands is considering the sale of its casinos in its namesake city of Las Vegas. Sources tell Bloomberg gambling mogul Sheldon Adelson is looking to focus on the Asia market. The world's largest casino company is looking to offload properties, including the Venetian resort The Palazzo and others. Together, they may fetch about $6 billion or more. A paused clinical trial of an experimental antibody therapy from Eli Lilly won't be resuming. Researchers concluded the drug likely would not help hospitalized COVID-19 patients with advanced cases. It was initially halted due to safety concerns, but the review did not find that the treatment caused any harm. That's your Bloomberg Business Flash. John and Marie.
Laura, thank you. Thank you very much. Coming up, a busy day for earnings. Santander surging on better than expected results. We come through the numbers next. About 18 minutes into the session, here's the price action for you. The Stock 600 marginally negative. Santander is where the price action is, up around about 4.33% over in Spain. From London, alongside Anne-Marie Horden, I'm Jonathan Ferro. This is Bloomberg.
Definitely Citi saying that it is that loan loss picture that helped them in the market, handling really that dividend story very well. HSBC saying that they want to get back to the dividends, as the CFO was just saying to Manus Cranny, albeit more of a conservative dividend. That outlook, though, according to strategists, does depend on how the rest of the year in 2021 shape up. So there's still a lingering question whether HSBC will be able to get back to those dividends. Even so, the capital picture, their balance sheets still improving here.
Danny, AGM right now for Santander discussing dividends. That stock this morning up more than 4%. What's the takeaway?
Yeah, it's really remarkable what Santander is doing here, because HSBC is saying we want to get back to dividends, but Santander actually giving out their plan for how they are going to distribute the payouts. And as you say, at their AGM, shareholders at this very moment voting on that plan. But in Santander's earnings, they had a stronger balance sheet, better results in the Americas, lower loan loss provisions. And John and Marie, you both were talking to the CFO earlier, who really reiterated his idea that the ECB will allow them to get back to dividend payments. Let's take a listen to that.
A general ban on dividends has proven to be negative for the sector. So I think it's also at the same time very difficult to differentiate amongst banks, because you can put an undesired, let's say, negative perception on some institutions. So what we believe is going to happen is that they will allow for a small but a general dividend payment for the sector as a whole.
So Santander, they're moving higher by more than 4%. I should say BBVA also up higher this morning, likely piggybacking off of what Santander had for their earnings.
Danny, just finally, to round things out with some good news as well. BP up by about 2.5% in London trading, 25 minutes into the session. What's the story?
Yeah, big banks, big oil, all moving positive today. BP, those shares moving higher after a better than expected profit for the quarter. RBC says that their results, all of their core results, really a well-rounded picture. One of the key here is also their divestments. Their divestments helping them see cash flow that was better than expected. So that's an adjusted net profit of $86 million. The consensus was $117 million loss. They're so chipping away at their net debt. Again, that's in help to some of the sales that they're doing, and that is giving some confidence here to the market that they will also have a stronger dividend picture. John, Anne-Marie?
Danny, thank you. The stock positive this morning. Anne-Marie, on the year, BP down by 56.5%. Big Energy has found it really, really difficult through 2020.
Yeah, they certainly have. And while this is a bit better than what was expected, Jonathan, the refining margins are going to be very difficult for the oil majors, as is the trading environment. They made so much money off those contango plays, buying all the oil and cheap, storing it, selling it at a higher price. That's calmed down now. It's going to be very hard for them to turn a profit.
Stock looks good this morning. Let's get to the broader market. Around about 26 minutes into the session here in Europe, approaching the opening bell over in the United States, many, many hours away. DAX up, down by around about 0.4%. The FTSE 100 off by 0.2%. S&P 500 futures bouncing back just around about 0.1%. Just a really mild bounce. In Europe, we don't get...
I'm placing new order to buy Japanese yen at 104.76. Okay. Order placed by Japanese yen at 104.76.
another day of risk off across the financial markets, we bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
30 minutes into the opening bell. Here's the price action this Tuesday morning. Good morning to you all. Alongside Anne-Marie Hordern, I'm Jonathan Ferro. Equities lower, off by a third of 1% on the FTSE, down 0.4 on the DAX. On the Stock 600, materials, industrials, bottom of the pile. Take a look at euro dollar just quickly, Anne-Marie. A break of 118. Very, very briefly, 117.96. That's that euro weakness just coming into the mix, Anne-Marie.
Yeah, it certainly is. We're now back at 118, but this resilient euro we've been talking about over the past 24 hours getting a little bit of pressure, isn't it, Jonathan?
Just around the equity open, we just rolled over a little bit. 118.04 on euro dollar. A little bit more on that still to come. Let's get you some first word news. Here's Laura Wright.
Thanks, John. Prime Minister Boris Johnson is facing even more pressure over his pandemic policies. More than 50 members of his own Conservative Party are demanding a clear route out of lockdown for parts of northern England. The MPs are warning his pandemic strategy is disproportionately damaging the economy in the north, deepening the divide with the south. President Emmanuel Macron is facing a widening rift with some Muslim countries over his crackdown on radical Islam. Turkey's President Erdogan is leading calls to boycott French goods, but it's unclear how widespread that will become. Early responses are divided along familiar lines, with Turkey's allies on the one side and Saudi Arabia's on the other. The recent tensions were sparked by the murder of a French teacher. Women's groups are ramping up protests in Poland after the country's top court practically banned abortion. Demonstrators blocked key roads and bridges in Warsaw and other cities, bringing traffic to a halt. It marks a new high in terms of civil disobedience against the 5-year rule of the Nationalist Law and Justice Party. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. John, Anne-Marie.
Laura, thank you. Thank you very much. A week to go until the election. President Trump and former Vice President Biden hitting the campaign trail once again to make their final pitches to voters.
COVID, COVID, COVID. That's all they talk about, the fake news. COVID, COVID, COVID. That's all they talk about. What progress we've made on it, too. We understand it. We know we have to protect our seniors, especially when they have heart, when they have diabetes problems. And we are protecting them. We have the best testing in the world. That's why we show so many cases, because we do more testing than anybody else. But we're doing great. And, excuse me, here I am, right? I'm here too. Yeah?
The bottom line is Donald Trump is the worst possible president, the worst possible person to try to lead us through this pandemic. I don't think he just either doesn't have any idea what to do or he just doesn't care.
Joining us for more is our U.S. politics editor, Kathleen Hunter. Kathleen, a week to go, but more than 60 million Americans have already voted. It's a week until the vote wraps up. Where do things stand, Kathleen?
Well, I think that what we're seeing is, particularly on Trump's part, sort of an attempt to barnstorm the country, particularly in battleground states, of course, during these closing days of the campaign. And I think that strategy is based around the idea that he's embraced throughout this race, which is that he's going to win if you can really get his core, loyal base of supporters riled up into the polls. He's really run a base campaign, and I think we're seeing that again by him, going out and doing these in-person rallies, really falling back on his 2016 strategy. And I think that, obviously a lot has changed between now and 2016, so it remains to be seen whether that strategy is successful. But I think Trump's certainly doubling down on that right now.
Kathleen, yesterday, Amy Coney Barrett got sworn in, cementing a 6-3 conservative majority on the Supreme Court. How does this play? Does this mean we're going to see potentially more of those evangelical Christians that have really supported the Trump campaign and the Republicans in general for years come out at the very end to help boost his numbers?
Well, I think certainly, the Barrett confirmation yesterday is a base issue for both parties. And I think it's something that gets Democrats riled up, maybe not as much as Republicans, but certainly, quite a bit. And so I think that while this is a benefit for Trump in terms of energizing his base, I think there's a benefit there to Biden as well. In particular, perhaps for Biden among liberal voters, who the difference between Biden and Trump is, Trump really is someone that resonates deeply with the far right of the Republican Party. Biden has had some trouble on his left flank, and I think in this case, there's an argument that the Barrett confirmation actually does help get the liberal base more riled up and potentially come out to the polls.
Kathleen, let's just talk about the next week and where these guys are going. We talked a little bit about this briefly yesterday. Harris down to Texas, Biden to Georgia. The mistakes that were made in 2016 with the Clinton campaign, is it possible that this campaign, the Biden ticket, is making a similar mistake?
Certainly, it's always hard for a campaign to know exactly where to spend their time. Clinton, as you alluded to, was, widely criticized for ignoring Michigan, for example, and then losing Michigan. I think that certainly anytime you try to expand the map as a candidate, as we're seeing Biden and Harris doing right now, you open yourself up to, Monday morning quarterbacking, that you didn't spend enough time in states that you needed to and states that, maybe you took for granted. I think there are some significant differences, though, this year. I think we're seeing Biden with a significant fundraising advantage. We're seeing a lot of battleground polls that aren't tightening in quite the same way that they were in 2016. So, of course, we're going to all be looking at this in a week's time or, 8 or 9 days' time and having perhaps a different perspective on it. But I think that certainly right now it does signal that at least the Biden campaign thinks that they are able to expand the map beyond what the traditional battleground states have been.
Kathleen, the other major story in D.C. is, of course, the stimulus merry-go-round. What's the latest, or should we just not even care anymore?
Well, I think we can finally kind of put a fork in this until after the election. The Senate has left town. The House had already left town. Everyone's really focused on campaigning. I think that the big takeaway from these, 3 months of acrimonious negotiations that didn't end up yielding a deal before the election is that both sides kind of have a clearer sense of where the other side stands in terms of its negotiating posture so that they can pick this back up after the election. And the significant thing that's going to be different after the election is that we're going to know exactly which side has the leverage, which is something that we don't know right now. So I think right now there's been an incentive for both sides to kind of wait until after the election to see if their negotiating position is improved and then go from there.
Kathleen, great to catch up. Appreciate your time this morning. Thank you. Kathleen Hunter joining us on the election race with a week to go. Here's the price action. About 37 minutes into the session, the FTSE has been treading water. The Stock 600 is lower, off by 0.5%. We look like this. We're off by 0.9% on the CAC 40, off by 0.5% on the DAX. S&P 500 futures just about inching higher, up around about 0.1%. If you switch up the board, I want to bring in the bond market quickly, give you a feel of treasuries this morning. Treasury market really bid yesterday. 10-year yields coming in. 10-year yields this morning still in at around 80 basis points. On a US 10-year right now, I'll check in on the Bloomberg terminal for you. Your yield is 0.801%. Up next on this program, Novartis lifting its forecast, saying it's cautiously optimistic for the next few months. We hear from the CEO next. From London, this is Bloomberg.
Position opened on Japanese yen at 104.76. That's a long position, yeah?
"41 minutes into the session, let's check in on the board, shall we? Equity futures were positive going into the cash open. We've come out of the cash open and we've just rolled over on a CAC 40 down by 0.9%, on the DAX off by 0.4%. On the S&P 500 this morning, just inching a little bit higher, up 0.1%. Switch up the board, get to the bond market. I want to check in on 10-year treasuries. Talked about that just briefly a moment ago. Your 10-year yield this morning on a US 10-year, 0.8%. Big bid yesterday, and we just haven't unwound it this Tuesday morning. Similar story for the German Bund. The 10-year Bund right now, negative 58 basis points. And for the euro, just a taste of life below 118 very briefly. A 117 handle, 118.11 as we see things right now. That's the price action this Tuesday with your Bloomberg Business Flash. Here's Laura Wright.
Thanks, John. Santander has rebounded from its worst ever quarter with a profit that beat estimates. The Spanish lender is also reporting increased capital strength. That helps its case in convincing regulators that its balance sheet is strong enough to resume dividends. The big boost for Santander came from its operations in Brazil. HSBC has beat profit estimates for the third quarter, projecting lower loan losses than expected. The lender is also signaling it may resume limited dividend payments this year, saying it's considering a conservative payout. HSBC is in the midst of a full-scale reorganization with 35,000 planned job cuts. BP has narrowly avoided a third quarter loss, but the surprise profit may do little to change the gloomy outlook for big oil. Profit was still down 96% from last year, with pandemic restrictions taking their toll. The trading division wasn't able to cushion the blow this time after reporting strong results in the last quarter. That's your Bloomberg Business Flash. John and Marie.
Laura, thank you. Thank you very much. This morning, cautious optimism on the state of Europe from the CEO of Novartis. Optimism contingent on striking a very difficult balance between containing the virus and operating economies.
Going into the fourth quarter, we're going to have to see how healthcare systems grapple with the next wave of the pandemic. But I believe that healthcare systems have now learned a lot, learned how to manage the cases better, learned how to keep getting patients in for the care that they need. So overall, we're cautiously optimistic.
Well, walk me through that cautious optimism for Q4. We're about 27 days into it. How much visibility do you have at the moment, Vas, as to whether that momentum, that stability has continued?
You know, when you look at the visits of patients into the healthcare system, what we saw over the course of the summer was a slow recovery from the significant dip that happened in April and May, close to 60 or 70% reductions in outpatient healthcare visits. In September, that had almost normalized. In early October, we did see a slight dip again, but still pretty close to pre-COVID levels. We're watching those metrics very carefully. And what's important is they vary based on the individual therapeutic area. Some therapeutic areas very hard hit, others being able to manage better. I think overall, health ministers, healthcare systems have realized what we can't afford is a second epidemic with respect to COVID. The second epidemic of non-communicable diseases, cancer, cardiovascular disease, rheumatological illnesses, taking a huge toll on large swaths of the population who suffer from these conditions. So what we need to do now is strike the right balance, tackle COVID as the cases arise, and then continue to maintain, as close as possible, normal operations of healthcare systems.
I'm having deja vu as Europe goes back into lockdowns. You were in one of my last in-person interviews and my last time traveling to Switzerland. I want you to put on your different hat now. You worked on the H1N1 vaccine. When we had a mumps vaccine in the late 1960s, it was crazy how quickly we got there. 4 years. Are we getting ahead of ourselves talking about a vaccine the end of 2020, early 2021?
I think it's important to stay humble when we think about the development of medicines and vaccines. It is hard to find novel medicines and vaccines. And in this case, we're searching for a vaccine against a respiratory virus, which in the experience of vaccine developers, I myself have a history of in vaccine development, has proven extremely challenging. I think what we can reasonably hope for is we start to generate data, and I'm hopeful that by the end of next year, we'll have solid data on hopefully multiple vaccines that have reasonable safety and efficacy and have adequate volumes of the medicine to be able to treat large populations around the world. What I'm more confident about is what we'll continue to see is incremental improvements in patient care, slowly and surely better medicines to manage patients in the ICU, manage patients in the hospital, continue to get the severity rates down on COVID, and the world will be able to then manage this pandemic and manage getting back to a more normal way of living.
Vas Narasimhan there, the CEO of Novartis. A big week for Big Pharma. Today we hear from Eli Lilly, Pfizer and Merck. Later in the week, GSK and Sanofi. Joining us now, Sam Fazeli, Director of Research for Bloomberg Intelligence. Sam, fantastic to catch up with you, sir. Your view on the earnings so far and what you're looking for in the numbers in the days ahead.
Hi, Jonathan. Very nice to talk to you. So obviously, Novartis delivered kind of what we were hoping they might do after looking through the second quarter results. On the top line, there was a slight miss. There's either obviously pressure in several areas, but what they really did well at is managing costs and actually reducing costs. So the beat on EPS and also the raise on operating profit forecast is pretty much to do with lower costs, which seems to be if you can possibly ever say a silver lining from the pandemic as regards pharmaceutical companies. The cost to them in selling their products has reduced. Everyone's learned how to use telemedicine and accelerated cost savings. So that's where I think we're happy to see this. With other companies might follow suit. Different companies have different attitudes when it comes to using telemedicine. But it was very interesting listening to him with regards to the unraveling of the wave 2, wave 3, whatever we are.
Yeah, picking up on what Vas Narasimhan, the CEO of Novartis, he said to the world needs to pretty much stay humble when it comes to getting a vaccine. And he wants the data for the end of next year. And then he pointed to the fact that it's also, we need to see how we're going to be able to mass produce this. Where are we right now in the race for a vaccine?
Yeah, so I listened very carefully to his choice of words, and a vaccine available at volume with good data, several vaccines with safety data. Yes, he's right. That's pretty much into the second half of next year. But I think before the end of the year, we will have some news, whether it will be positive or not, we'll see, on the particularly Pfizer vaccine, potentially Moderna's vaccine, and also AstraZeneca's trial in the UK, as to how well they've done in these settings. And yes, he's right. Respiratory diseases are tough to treat or prevent with regards to vaccinations.
There was a conversation, Sam, briefly about scaling up some of the treatments, scaling up some of the vaccines. How quickly do you think we can scale up a vaccine, get that production capacity out there, get it distributed widely? If we see something good November, December time, how quickly can that happen, Sam?
Yeah, so Jonathan, a lot of that depends on how many vaccines we end up having. So if it's just basically Pfizer and Moderna that work, I think the sort of number of pledged doses for 2021 is something in the region of 2 billion. Let's say that the world turns into this enormously cooperative, friendly place, and everybody starts working together and really just pulling together and giving up as much manufacturing facility as possible. Maybe you can get that to 3 billion or 4 billion. I'm just completely speculating here. So obviously not enough to cover the entire world, but it all depends on how many vaccines succeed and for whom and where. You don't need to vaccinate everybody to get a good result.
Yeah. Hey, Sam, great to catch up with you, buddy. As always, Sam Fazeli there of Bloomberg Intelligence. Thank you, sir. Coming up on this program, with equities lower in Europe once again, the equity market breaking down by around about 0.6% over in Paris. On the DAX in Frankfurt, Germany, we unwind some of the morning's losses, down around about 0.1% there. The FTSE looking flat. The S&P 500 picking up just a little bit. Futures up 7. We advanced 0.2% there. Up next on this program, on the Bloomberg M Live blog this morning, they're asking what assets will move most on election morning. That conversation coming up next. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Around about 0.6%. What you need to be watching through the trading day at 12 p.m. UK time, we get durable goods orders out of the United States, and at 2 p.m. we get consumer confidence. Deep into earnings season, looking for numbers out from Eli Lilly and Pfizer a little bit later on. Joining us now, I'm pleased to say, Laura Cooper, Bloomberg's M Live macro strategist. Laura, walk us through the question of the day and the answers you've had so far, please.
Well, certainly I think what markets are looking for when we wake up next Wednesday is whether we'll actually see a clear winner, whether we know who will actually be the next president of the United States. But I think, markets have shifted positioning away from contested election risk to more a case of that blue wave reflation trade taking over. So if that does prove to be the case when we come into the office on Wednesday, it's likely to be the case that we're going to see kind of that bearish narrative in rates continue to play out. So that curve steepening, extending, potential for 10-year treasuries to reach that 1% threshold, of course, depending on whether the Fed kind of steps in to buy duration. And then I would think that in the equity market, the fact that we would likely see this rotation take hold away from those secular growers like those tech stocks to more of those cyclically exposed small cap stocks. And then if there is clarity in terms of the election outcome, I would expect to see kind of the sentiment bid in Europe. Yes, we are seeing these rising virus case counts weigh, but ultimately it should be somewhat supportive over the medium term if we do see less protectionist trade policies. So crucially, though, I think it really depends on really the outcome and whether there is a contested election or not, because markets are not really positioned for that right now.
Interesting, and also, of course, who wins. Jonathan and I were talking about yesterday, there's a lot of notes going around about currencies, how the Mexican peso would do well in a Biden win, but the ruble won't do so much. I'm wondering, are clients looking into a different singular trades like that?
I think that it certainly is the case. I think, clearly the fact that we're likely to see potentially those high beta currencies like the euro, like the Canadian dollar, catch bids on this election clarity. So it's likely to be the case that we could see that euro dollar pair break through that psychological 120 level. And I think that's really kind of a consensus trade at this stage. I think when we look to bond markets, I do expect that investors are likely positioned for that underperformance in treasuries, notably when we look against, the core European bonds. So those are likely to come under pressure as well, just on the fact of some of these unwind of haven bids. But ultimately, I would expect that just given the fact that a reflation trade under a Biden win is likely to provide more stimulus down the line, that could actually play out more in treasuries than elsewhere. So certainly if there's a Trump presidency, however, I would expect it to be the case that the dollar could catch a bid on this renewed uncertainty, and ultimately for these status quo trades that we've seen to continue to persist.
Hey, Laura, great to catch up. Brilliant work as always. Laura Cooper there, Bloomberg's MLive macro strategist. Anne-Marie, I anticipate that whatever the price action will be the morning of the November 4th, we will find a narrative that fits neatly and extrapolate it out 12 months. I remember that night of the election, 2016. I was sitting there alongside Guy Johnson, and it was all about the acceptance speech from President Donald Trump, or President-elect at that point, and he talked up infrastructure spending. It became about the policy and the policy emphasis in that speech that drove markets for the next several months.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Canadian interests. I will only sign a deal that is good for Canada.
Coming up on Bloomberg Best, the stories that shape the week in business around the world.
Welcome to Bloomberg's Big Decision. Really good to have you here.
Thank you so much for having me today. We know this business inside and out. You've really built a conglomerate.
We saw amazing opportunities in the Middle East.
They had the dream. You had to bring it to reality.
Between the three of us, we can really do anything.
I feel like this is where we should go.
One week to go, Biden picks up his campaign pace as the Senate hands a Supreme Court judge confirmation to Trump and the Republicans. Stimulus hopes fade. Nancy Pelosi and Steve Mnuchin failed to resolve differences. A pre-election bill looks unlikely. Futures mixed after the worst sell-off in a month. And HSBC surges after Chief Executive Noel Quinn touts significantly lower credit losses. The bank also aims to pay a conservative dividend. Well, good morning, everyone. This is Bloomberg Surveillance. I'm Francine Lack in London, Tom Keene in New York. Tom, it's all about the election, but of course, the fact that there's a stimulus hopes fading is filtering through the markets. And if you look at the markets, it's a lot on the earnings. We had HSBC with talk of that dividend. BP actually saying it's going to be a very volatile couple of quarters ahead.
Well, the pandemic overlay is still there. That was clearly the theme yesterday. I think, Francine, far, far more than the election. It was certainly the talk of New York. Every conversation was about a re-embedding of the pandemic. We're going to try to put in scale, Francine, today through all of surveillance's pullback that we've seen. Obviously, with a leg up, it's not nearly as much damage as you'd perceive, at one point down 900 Dow points yesterday. But here we are with futures up 6.
Yeah, and Tom, what's also significant, certainly in a lot of the European countries, is that there seems to be a backlash against governments that are trying to put too many restrictions, or certainly too many restrictions in the eyes of people that want to get back to work. So we'll have a look at that. Now let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom. Amy Coney Barrett has been sworn in as Justice of the Supreme Court. The first of 2 required oaths was administered not long after the Senate voted 52-48 to confirm her. Every Republican but one voted in favor. Chief Justice John Roberts will administer the second oath today at the court. Barrett's confirmation solidifies a 6-3 conservative majority. The record coronavirus surge that started with young Americans has now reached the oldest populations, according to the CDC. Counties with the largest 65 and older populations now have an average 19 daily cases per 100,000 residents. That's 67% higher than a month ago. China ramped up its purchases of American goods last month. Still, it's far from the full-year target set out under Phase 1 of the trade deal with the U.S. The Chinese bought more American oil, soybeans, and cars. With 3 months to go in the year, Beijing is a little more than a third of the way toward the goal of $170 billion in U.S. imports. In the UK, Prime Minister Boris Johnson faces a revolt from more than 50 of his own Conservative members of Parliament. They're demanding a clear route out of lockdown for parts of northern Britain that helped give him a majority in the last election. The lawmakers told Johnson his strategy of targeting local areas with restrictions was disproportionately damaging the economies of northern regions. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, thanks so much. Off the carnage yesterday, let's recalibrate here if we can. We bounced. Futures up 6. VIX 32.53 to review. 28, we went to that 30 level about 24 hours ago, and now through another 2.5 big figures, 32.52. In the bond market, remarkable stasis with the 10-year yield 0.80%. Just amazing, the non-correlation of equities, south, and bonds. Yeah, they move, but not all that much. Brent, $40.72. Watching that carefully. The dollar complex is flat. I'll let Francine talk about that. Other than to say Turkish lira off a moving average study of the end of July, a 16% depreciation, a ginormous depreciation since an important mark in the spring of 2019. Francine, we're losing scope and scale on lira collapse, 8.61 lira per dollar.
Tom, I'm looking at Turkish lira, but what I'm also looking at is a lot of the earnings coming from European stocks, which is why I'm looking at European stocks opening a little bit lower. Now, again, investors are trying to weigh positive earnings reports against concerns that surging coronavirus cases will hurt the global economy. Certainly, when you look at European leaders and European countries, it does look like they're going towards more restrictions or even lockdowns. So Santander beating estimates, Novartis actually erasing some of the early share gain. And then because we had BP, I also wanted to look at crude oil nudging higher, treasuries and German bunds actually pretty much steady. Now, to talk about the markets and talk about the way forward for the lockdowns, joining us now is Patrick Armstrong. He's Chief Investment Officer at Plurimi Wealth. Patrick, thank you for joining us. What is the market looking at? Are they worried about a double-dip recession because of these extra restrictions on an economy, or do they just look at earnings and hope for the best when it comes to a stimulus in the U.S.?
I think the uptake in the virus, and it's looking much more likely that we're going to have soft forms of lockdowns, maybe not the full lockdowns we had in the spring. And it's really hard to see how you avoid a double-dip recession in Europe. So the U.S. hasn't gone that way necessarily yet. The U.K. is doing half measures, but the services part of the economy is a big part of the economy everywhere in the developed world, and services have been hit hard. And I think it's been going in that direction for several weeks, but it started to hit home, I think, a little bit over the last few days.
Patrick, is this on the assumption that we get a second lockdown? I mean, every single European government, Italy, France, and others said we will not go into a lockdown. And of course, the options are now narrowing, and this is where we're headed. How can they mitigate it? Can we afford to mitigate it?
I don't know which way the political winds will blow. The strategy they're using right now is as hospitals fill, lockdowns is what the playbook was in Q1. I don't think they're going to deviate from it necessarily. So we've got softer measures in place that are designed to slow the spread of it. It does seem to be in Europe, the strategy will be initiating lockdowns if needed, and the path of new cases and hospitalizations is moving that direction.
Patrick, this is a completely unfair question, but come on, it's a Tuesday before an election. What percentage has corporations adapted to the pandemic? I mean, are they like 3/4 of the way on to where they have to be given a long pandemic, or is there a lot more adjustment and adaptation to go?
I don't know if companies have adapted really that much. I think the ones that have the winning business models haven't needed to adapt, and they've really been the winners of Q1. So the healthcare companies obviously are not impacted by this. The technology and the communications are net beneficiaries from working from home, staying at home, just various forms of electronic communication. So those are the real winners. Other companies, it's been subtle changes where they're just trying to get through it rather than trying to create strategies where they can win from this. And I think that's the playbook you've got to look for, is the winners from Q1 and Q2 are probably going to win out if we do have another lockdown scenario for the remainder of this year.
Joseph Feldman over at Telsey Advisory Group just reaffirming an outperform on Amazon, all perceived as a winner in this pandemic, and his price target is 4,000. I'm going to call that a 20% pop from here. Joe Feldman with an outperform on Amazon. When you see that, Patrick, there's a great idea of a rotation of movement within the market. Does the market leave the big tech successes behind?
I still think big cap tech is where you want a significant portion of your capital right now. They're very expensive on every measure versus traditional measures, but yields are even more expensive on versus their history. So big cap tech is very expensive. I can see how they're going to grow their way into the multiples. We don't own Amazon, but we do own Alphabet, Facebook, and Apple. All of them expensive. All of them are going to grow their way into the multiples. And when the discount rate's zero, I'm happy to have companies that have winning business models that are generating growth rather than the failing companies that are just seeing earnings and business models destroyed by what's going on.
But Patrick, what are those? If you're a consumer goods company, for example, I mean, you don't have very high multiples, but you're still selling toothpaste. What do you do with that industry?
Well, yeah, I don't know if toothpaste is impacted necessarily. The high-end luxury consumer, something we've got exposure to. So LVMH had very good results. We own Kering, actually. Results weren't stunning, but I think that sector as a whole is performing very well. It's the services sector rather than the consumer goods that are really impacted. So the travel, the leisure, movie theaters, things like that, there's just no answer to it. The services part of the economy is really in trouble, and I don't see a quick way out of it right now.
Patrick Armstrong with us today in this hour to help us with the adjustment. Red and green on the screen now on futures, stumbling off of that shock market of yesterday. We'll continue with Mr. Armstrong. This is going to be interesting. Talk about rip up the script. He is in the news. The chief executive officer from Indiana, that must mean Eli Lilly, David Ricks will join us, and that company decidedly in the news with a challenging antibody test. We'll speak to Mr. Ricks in the 7 o'clock hour. This is Bloomberg. Good morning.
This is Bloomberg Best, your weekly review of the most important business news analysis and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
COVID. That's all they talk about, the fake news. COVID. That's all they talk about. What progress we've made on it, too. We understand it. We know we have to protect our seniors, especially when they have heart, when they have diabetes problems, and we are protecting them. We have the best testing in the world. That's why we show so many cases, because we do more testing than anybody else. But we're doing great, and, excuse me, here I am, right? I'm here for you.
The bottom line is, Donald Trump is the worst possible president, the worst possible person to try to lead us through this pandemic. And I don't think he just either doesn't have any idea what to do, or he just doesn't care.
The battle here 7 days on, and we'll see the festivities again today and on through. The campaigning picking up, no question about that. We're picking up our conversation with Patrick Armstrong with Plurimi Wealth as we look at the markets. Yeah, we can dovetail it around the election. We can dovetail it to stimulus, presume. Patrick, I looked very carefully today at the slope of the five-year break-evens, the view out 5 years, the guesstimate out 5 years of what inflation will look like 5 years on from there. And it's amazing the inflation distinction, the upward vector of the United States versus everyone else. How do you play that discrete separation? Inflation guesstimates in the U.S. and flatness and disinflation guesstimates everywhere else.
Yeah, with the UK, I guess, being the other notable exception, we've got quite high inflation forwards in this country as well. And for me, I'm really surprised gold hasn't been rallying over the last month. So gold got up to 2,000, fell off to 1,900. I think that's your natural inflation hedge. And if we ever do see inflation coming into the system, I think there'll be a massive amount of people who want to hedge inflation, and that'll be a significant amount of demand for gold as well. We prefer inflation-linked treasuries as well to the traditional treasuries, which is you're locking in a negative real yield, but that's a bit of a hedge from any outsized moves in inflation.
What is the stability of the negative real yield? First time I'm looking at it today, a negative 0.93% on the 10-year yield. We've been as low as, I'm going to guess, a negative 1.01-ish as well. Could we break through there and go to an ever larger negative inflation-adjusted yield?
I think that's the path over the next few years, that I think eventually the Fed will engineer the beginnings of inflation. And if you do see the 10-year yield start to move higher, which naturally it should, I think that's the point the Fed changes its strategy and moves into yield curve control, or starts talking more aggressively about that we might move into yield curve control and then implementing that. And that's just the recipe how you get very high negative real yields, or very low negative real yields, I suppose would be the way to put it.
But Patrick, where do you see inflation first? I mean, would we be importing, inflation from China, or is it something that would be homegrown?
It's as Friedman said, it's always a monetary phenomena. It always has been and always will be. And M2 growth is running at 24% over the last year. Money supply, the velocity is very low. You need something to unlock the velocity of money supply, but you also need basically the fiscal stimulus to take over from the monetary stimulus. QE is creating asset price inflation. I think when you get fiscal stimulus and money direct to consumers, that'll unlock some goods inflation eventually, because there is so much money. Liquidity is abundant. It's in the hands of people who are buying assets. You've got to get money in the hands of people who buy goods, and a weaker dollar, you'll start to see some inflation eventually.
What's eventually, Patrick? Like 18 months, 24? Could it be longer?
I think for the next 12 months, the deflationary backdrop is overwhelming anything that's happening on the monetary side of things. So I think by the time you get 18 to 24 months, you might start to see a realistic prospect that the Fed meets its 2% target. They've said they'll let it run hot after that. But I think, in the next 12 to 18 months, I don't see any meaningful inflation anywhere near the Fed's target. But I think by the time you get past 2 years out to the five-year forward Tom was talking about, inflation, I think, is the net result of all the policies and debt being put in place.
Patrick, thank you so much. Patrick Armstrong, their Chief Investment Officer at Plurimi Wealth. Of course, he stays with us. We'll talk a lot more about also some of the German bunds and some of the things that we're seeing on fixed income in Europe. Now, coming up on Bloomberg Markets, Jeff Curry, Goldman Sachs, Global Head of Commodities Research. That interview, 10:30 a.m. in New York. That's 2:30 p.m. in London. A reminder, everybody knows it, but good to remind you, 7 days away from the U.S. election. This is Bloomberg.
what would you say that the CDC or the FDA or the White House or HHS should have done differently?
Almost all of us have underestimated the dramatic impact of this outbreak.
Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Facebook, Twitter, Google, and TikTok are bracing for a night of election chaos. The worry is that once polls close on November 3rd, the results will be delayed or unclear, providing an opportunity for the spread of incomplete or inaccurate information online, even from candidates themselves. With an estimated 220 million monthly active users in the US, Facebook may have the biggest job. CEO Mark Zuckerberg told Axios in September he's even worried about potential violence.
There is a heightened risk of civil unrest in the period between voting and a result being called or after that.
He wants to stop candidates themselves promoting misleading or false claims. Facebook will remove posts that it judges to equate to voter intimidation. It will also label posts by candidates claiming victory prematurely. Users will be directed to trusted, verified sources of information, and it's already banned new campaign ads starting a week before Election Day. Once polls close, all political ads will be suspended. Twitter will do something similar for its 36 million US users with an election hub, and like Facebook, may remove or label posts that say election results are rigged. Google will shut off political ads on all of its platforms after the polls close. On YouTube, the company bans videos that are doctored, incite violence, or mislead viewers about voting. But YouTube often lets clips deemed newsworthy stay up in spite of violating policies, and the company hasn't said how it will treat claims about election results from candidates. Video app TikTok has launched an in-app guide to connect Americans with trusted, verified sources of information, and the platform doesn't accept paid political ads. Some of the social media companies have already come under fire for their stance on combating misinformation and content moderation around the election. Lawmakers have voted to subpoena the CEOs of Facebook and Twitter over their handling and distribution of a New York Post story about Joe Biden's son. With hundreds of millions of Americans on social media, the companies face a race against time to act on posts that could spread false information. For example, when President Trump tweeted on October 6th that COVID-19 was no worse than flu, it was shared more than 43,000 times before Twitter hid the post behind a warning label. On election night, by the time companies act, the damage may already have been done. Ed Ludlow, Bloomberg News, San Francisco.
Edward Ludlow out in San Francisco with a very important report there on social. And Francine, to drive this forward, our best and brightest on Supreme Court, Gregory Storr, out with an article this morning I already put out on Twitter on Wisconsin. Can you do your voting, and if they get the ballot after election, can it be counted? And the Supreme Court of the United States yesterday said, no, it cannot. It was a 5-3 decision. And the point here, Francine, for our international audience, is the battle over when a mail-in ballot counts is state-by-state warfare. That's the key message here. Wisconsin, clearly the Supreme Court sides with the Republicans.
Yeah, as you know, someone who doesn't live in the U.S., it's amazing that you still have these state laws. Just like if the election were to be contested, then it's actually up to each state law to come in place. It's something we need to watch out for. I was reading something that about 65 million people have already cast a vote, which I think is a record that we've had so far, Tom.
Yeah, well, there's no question that we've burst through that, and there's some really good charts showing they have those percentage dynamics here 7 days away from the election. To Ed Ludlow's good work, The social media debate is front and center as well. And again, I would suggest, Francine, that what's important is it seems each social media is different in its interpretation and its impact.
Of course. Yeah, but also because it reaches a different audience, right? So it's up to each social media, given the amount of scrutiny they've also had, but also who they reach and how they influence. Tom, let's get straight to the data. I don't know if you want to kick us off or whether I start. Why don't
you start. Go
look
ahead.
at dollar.
Go ahead.
Yeah, so basically we've just had quite a lot of earnings, Tom, and if you look at the industries, it's really an industry by industry kind of look. So I'm looking at HSBC, better than expected, others not so well. We're seeing a bit of fluctuation on U.S. futures, European stocks down, and then I'm also looking at crude oil a little bit higher. Treasuries and German bonds pretty much steady. I know Tom is very focused on Turkish lira, so we'll get to that in a second, Tom.
8.16 on lira, dramatically weaker in the last 3 days. Coming up on Capgemini, this is Bloomberg. Good morning.
Jacinda Ardern's Labour Party holding 64 seats in the 120-seat parliament. Now, that is interesting because it's the first time since the introduction of proportional representation in 1996 that any party has won enough seats to govern on its own. Now, this is by turns rather luxurious and also slightly terrifying for the new Labour government because there are no checks and balances on power. There is no upper house. Jacinda Ardern can pretty much rule as she sees fit. So she did rule out, heading into this election, any capital gains tax, but as revenue collapses, it must be very tempting to give that policy another look. She's also contemplating going into coalition with the Greens Party, even though she doesn't actually need them to govern. Now, the Greens Party did take forward a more comprehensive package of tax reforms to this election. So were she to govern in concert with the Greens, they could do much of the heavy lifting on tax reform, which may also prove to be a little unpopular with some portions of the electorate. So it's going to be very interesting to watch this new turn. There's going to be a lot of new and untested MPs in the caucus. So a second Jacinda Ardern term is going to be full of all sorts of different challenges to the ones that characterize the first.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Tom Keane in New York. Tom, shares of Capgemini are rising today as the IT service firm reports third-quarter revenue that actually beat estimates. Now, Capgemini's reassuring results follow some pretty disappointing results yesterday from SAP. Now, joining us from Paris is Carole Ferrand. She's the Chief Financial Officer at Capgemini. Carole Ferrand, thank you so much for joining us on Bloomberg Surveillance. I want to get onto your earnings in a second, but first of all, is there a fallout on what we heard from SAP that would impact Capgemini? I mean, yesterday was pretty ugly for a lot of stocks in your industry.
Yes, good morning, Francine. Yes, we were quite surprised about the evolution of our own stock price yesterday because really the dependency on SAP implementation projects at Capgemini is quite low. It's a low single-digit number in terms of weight in our revenues. So really, when we look at on our side, I mean, the traction is there on SAP S/4HANA implementation. As you know, one of the traction for growth for us is cloud, digital and cloud. And what we see on our side in terms of traction of business on S/4HANA is positive, both in terms of revenues and booking.
What did you learn from the sell-off yesterday, from the rout? That everything is linked, or that, you know, is it something to do with investors? Has it taught you anything?
Maybe there was forward? The cross-reading was not appropriate as such, and I mean, if you look at our results, I mean, Q3 results are very solid. I mean, we have been capable to achieve a 4,008 million euros revenues, which is a 18.4% growth at constant currency. In terms of organic evolution, it's a very contained and limited decline of 3.6%, which compared to a minus 7.7% in Q2. So really a net recovery, a clear recovery in Q3, slightly above what we expected. So clearly strong achievement and across all dimensions, sectors, geographies, and business lines. So that's very important to us.
Carol, Tom Keene in New York, good morning to you. I am absolutely fascinated where the cloud is and the certitude of revenue growth is in the cloud 5 years on. In the United States, we have the train wreck known as international business machines. IBM is shattering apart into two pieces, trying to adapt to this world where Amazon and Microsoft just keep going on and on and on. What is going to be your value add to sustain that high double-digit revenue growth?
I mean, as a matter of fact, cloud is a very important element. I mean, when we say digital and cloud is the core element of our growth, indeed, again, this quarter, it's above 10%, so quite significant. And of course, within digital and cloud, cloud is an important component. And if you look at the traction of the business with the three main hyperscalers, bookings have really grown up by around 50% in Q3. So really the traction is there, and the move to cloud, really the transformation of our clients' environment from legacy business to cloud environment is really a strong traction.
Carol, what happens in 2021? I know there's a number of uncertainties, including, you know, possible lockdowns, how we work from home, how we work going forward. But what's your central expectation for the first half of next year?
What we see today, even though, like everybody, we need to be cautious given the context, but we see the group coming back to organic growth somewhere in Q2 next year. So we are really, we have some ambitions, of course, for 2021. Of course, the recovery and the slope of recovery will be different when it comes to some sectors, some geographies, but all in all, because we have diversified the group in all dimensions, sectors, geographies, and business line, we are at this stage very confident to come back to growth in Q2 next year.
Thank you so much, Carole Ferrand there, Chief Financial Officer at Capgemini. Now, we'll have plenty more, of course, on some of these stocks that are coming out with earnings. We had a number of earnings that beat estimates and others which did less than well. Now, let's get straight to the Bloomberg First Word News in New York City. Here's Ritika Gupta. Hi, Ritika.
Hi, Francine. It's a big win for President Trump and congressional Republicans on the eve of the election. The Senate confirmed Amy Coney Barrett to be the newest justice on the Supreme Court. That solidifies a 6-3 conservative majority. Barrett may be asked to weigh in on cases that could determine the outcome of a close election. The paused clinical trial of an Eli Lilly experimental antibody therapy won't resume. Federal researchers concluded the drug probably wouldn't help hospitalized coronavirus patients with advanced cases. Still, other trials are ongoing to see if the Lilly drug helps patients earlier in the disease's course. And a Labour union is suing President Trump over an executive order that makes it easier to fire federal workers involved in policy-making decisions. The National Treasury Employees Union represents 150,000 federal workers. Critics say the order is a way for the president to require political loyalty from civil service workers. And the Trump administration has taken another step certain to make China angry. The State Department has signaled its approval for a potential $2.4 billion sale of anti-ship missiles to Taiwan. China and the U.S. are already at odds. Yesterday, Beijing imposed unspecified sanctions on Boeing's defense unit, Lockheed Martin, and Raytheon because of a previously announced arms sales to Taiwan. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rishka Gupta. This is Bloomberg. Francine, Tom.
Hey, Radhika, thanks so much. We're going to get back to the politics of the moment. Matthew Goodwin at Kent is very interesting on politics and, of course, international relations. There's a few things to talk about, to say the least. We will do that. Futures up 7. They advance a little bit here off the red and green of an hour ago. Stay with us. From London, from New York, this is Bloomberg. Good morning, everyone. Bloomberg Surveillance looking down here at the terminal, all set up here, showing me futures up 5, down futures
Markets
up 9.
Yeah.
Markets as well, dollar flat off of the challenges that we saw yesterday. Yield 0.80% in the 10-year yield. Right now in politics, and this is a joy, Matthew Goodwin, professor of politics and international relations at University of Kent, is really granular about this with a great historic template as well. Matthew, I want to get a broader scale here. I put up a banner yesterday that said 1799, 1800, 1824, and now 2020. This is from a brilliant legal mind at Washington, William and Lee in Virginia. In the history of the nation, aren't we supposed to have close elections?
Well, absolutely, and I think this one is a very close election as well, Tom. One historical comparison, of course, we're all fixated with, a recent historical comparison, is that 2016 shock that, of course, really came from nowhere. But here's one suggestion for your American viewers, Tom. maybe the comparison actually isn't that shock result in 2016, which is keeping us all hesitant. Maybe the comparison actually is what happened on these islands in the UK in 2019. And the reason I say that, Tom, is all of the data points we had at that point were telling us that Boris Johnson was going to win a big election victory, but we largely refused to believe them because we were haunted by the memories of 2016,
right,
the Brexit vote, and then the 2017 election. And actually, all the data points were pointing in one direction. Now, if you look at all the data points in the US at the moment, the opinion polls, the forecasts, the betting markets, they are all pointing in one direction, but we don't want to believe them because of those historical nerves around 2016.
What does the middle ground look like? Of course, the great idea here is that there's very few undecideds. In your historical research, is it a surprise there are so few undecideds?
No, I don't think that's surprising. I think as we've seen American politics simply become far more polarized, and people have been taking these positions not so much according to things like their income, but more because of things like their values and their identities, that we've really pushed people into these political camps. If you look at, say, where Republicans are lining up, where Democrats are lining up, it is as we would expect. There are very few undecideds. Of course, the million-dollar question, Tom, is whether we really do have this so-called shy Trump effect that some people are pointing to in the polls.
Yeah, and Matthew, that's exactly what I was going to ask you, because we saw a similar phenomenon, you know, with Silvio Berlusconi, I think in the second election that he won, is that people were, because he was such a divisive figure, people were ashamed of saying that they would vote for him, but then they ended up doing it. Are the polls we're looking at adjusted to take into account a possible Trump shy voter?
Okay, so we've seen a number of big changes since 2016, and some folks are losing sight of this. The polls have changed in the way they take account of things like education and also how they take account of things like geography. So what they've been trying to do is, in effect, listen a little bit more to those non-university educated, more rural voters that tend to lean a bit towards Trump. Of course, he's still got every chance, even though Biden is averaging an 8-point lead nationally, a 4-point lead in the battlegrounds. Trump still has, in effect, around a 1 in 8, 1 in 9 chance. We had, in my discipline, political science, we had the forecast come out yesterday. We had 7 forecasts. 5 of them said Biden's on course, but 2 of them said Trump's on course.
Okay, what needs to happen from now until, you know, next Monday for those polls to change? Is there just not enough time for President Trump to reverse this?
Well, as of now, obviously, I think it's fair to say that this is Biden's. If you look at the polls, the betting markets, just in case you're interested, also now have Biden up. They're giving him an implied chance of around 67%. I think effectively it's too late for Trump to turn around the polls, but that doesn't mean he can't win. What I mean is, in effect, what he's relying on now is polling error. And there'll have to be a significant polling error if we are to wake up with Trump 2.0. It's not completely impossible. It's still plausible. It's just something that I think now is beyond what we're seeing in the polls.
Matthew, from across the Atlantic, if we get a Biden presidency and if we get a Republican Senate, is it a different Republican Senate than what we've seen the last 4 years?
Well, I think from the perspective of where I am in London, Tom, I think that, in a sense, is a bit of a nightmare scenario for us, because we're looking at this outcome as providing clarity on the Brexit negotiations, on the free trade agreement between the UK and the US. The last thing, to be blunt, that we want is a Democrat president and a Republican Senate. We want a nice, clear outcome that can allow us, as we try and define what global Britain is under Boris Johnson, that can allow us to sign that free trade agreement. And I'll tell you, Tom, there's a lot of nerves in here, London, this week about the fact that Biden is looking like he's coming in, because they do view Biden as being quite anti-Brexit, that he's not really being as supportive of Britain's decision as, say, Donald Trump was. So I think there are some diplomatic maneuverings going on in the background as number 10 tries to cozy up to the Biden camp.
Matthew, I have just been sent a poll, actually, by Newsweek, done by Rasmussen. This is a Rasmussen report poll sent by a viewer saying that, you know, for one of the first times, Donald Trump has a slim lead over Democratic presidential nominee Joe Biden. But Matthew, I want to, you know, ask you a little bit about Brexit. Is there a danger, no matter what happens, if we have a deal or no deal, come January, there's Brexit. Will the EU continue, you know, to be talked about in UK politics for years to come, no matter what the outcome in January is, whilst the EU moves on and forgets about the UK?
Well, I think we're going to be in a somewhat awkward relationship, perhaps like that awkward ex that we might talk to from time to time, but we're not going to be as integrated as we once were. Look, the primary diplomatic challenge facing the UK is to now go on and forge trade agreements with non-European Union partners and to define what global Britain is. For the European Union, don't forget, this is the first time in the entire history of the organization that a major power has voluntarily decided to leave. And the European Union has huge challenges between North and South. It's still got the lingering refugee crisis, and it still has a vacuum of leadership. We've got Angela Merkel, who's about to depart from the center stage, and there are massive questions looming over the EU. So I think they will move increasingly in different directions. Of course, a Biden presidency might exacerbate that. A Trump presidency, a Trump 2 presidency may line up more neatly alongside the UK than the EU. So this election really does matter for those of us across the pond.
Professor, thank you so much. Matthew Goodwin at the University of Kent. We've got much more here on the markets with a recovery. I'll take it. Futures up 5, but also on politics as well. Formerly working with President Bush, Lester Munson, BGR Group Principal. We'll do that in the next hour. This is Bloomberg. Good morning.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
We will make an evaluation, I think, at the back end of this year, early next year, on the economic outlook. We're obviously got to engage with our regulators in due course, but I do think the market should expect us to start very conservatively. I think by far, though, the biggest risk that we are facing at the moment is the impact of COVID-19 and the shift in the global interest rate environment to a near zero interest rate environment that we expect to be persistent over the next 2 to 3 years.
voices on banking and the mystery of the accounting of HSBC. You and Stevenson there this morning. Right now, the smartest guy in the block, Jonathan Tice, writes blistering, incomprehensible memos for Bloomberg Intelligence. If you need to clear the mind, read one of his notes early in the morning. It is extraordinary how he can explain 47 ways to measure loss quickly with a bank. Jonathan Tice joins us from Bloomberg Intelligence. John, your notes show the complexity of measuring, of taking a loss, of giving back a loss when the loss doesn't happen, etc. Provide clarity. Is HSBC profitable?
Yes, HSBC is profitable, and I think the good news from this morning is that its profitability is definitely more than discounted by consensus, i.e. consensus will start going back up now. And the main two bits of good news from today, to my mind, are one, they gave us a range of $8 to $13 billion for provisions for this year. They've now said it'll be at the bottom end of that range, so consensus for this year and next year should improve by about $2 billion. And also on the costs, they can comfortably beat estimates, but they've also said we acknowledge that $4.5 billion a year of cost savings isn't enough. We're going to move that number higher. So that's why you're getting such a strong reaction in the shares today.
Does HSBC need to remove costs at the employee margin, cut employees, or do they need to jettison businesses?
Well, they're reallocating a lot of capital, so they're shifting towards Asia. The 35,000 of headcount, that ultimately will go up, but that's because of digital banking and that kind of thing as much as the crisis. Variable expenses, they've cut dramatically already. They're doing a really good job there. So I think they're pretty much on track to right size, but certainly we still look at things like their US retail footprint and question why on earth it's part of the group. So I think at the full year we're going to get a full new set of strategic targets and an updated strategy. And again, they told us today they're going to be more aggressive on the costs. I think they may be a little more aggressive on some other bits of restructuring as well.
But Jonathan, how do they, adapt to this protracted low-rate environment? And if you look at some of the risks, so there's Brexit still on the horizon, and there's US-China trade.
Absolutely, very fair question, and it's one that they sort of address up front in the presentation. They say, look, our interest rate sensitivity is falling because we're shifting away from interest rate type products. So it's fees, it's wealth management, it's the non-lending parts of the business. So there is no way to escape the low rate environment, and it will take them several years to sort of reposition. But bear in mind that Asian banking is far more profitable than, say, UK mortgages, and that type of thing. So their pivot to Asia is addressing the problem. But as they put their hands up themselves and said, look, 4Q, we've still got some serious net interest income pressure, but we think it will begin to stabilise from there. So again, I think consensus improves. Revenue will probably improve as well, which is the main point of our BI focus on HSBC, because there's a lot of bad news in the price. They've almost come and given some good news earlier than we expected.
We also have some breaking news out of renminbi yuan. So the Chinese yuan, Jonathan, as we know, has been strengthening last week, and according to Reuters, it's removing its countercyclical factor in yuan fixing. There were a number of stories also pointing to the fact that China was trying to push renminbi to become more of a reserve currency. Jonathan, overall, actually, what's the relationship between HSBC and China? If, given the protests that we've seen in Hong Kong, can HSBC really survive that, or does it move to mainland China?
Well, I mean, China and it was Pearl River Delta was a massive part of their expansion plan. And clearly, the whole mention of unreliable entity and a sort of political falling out between the US and China, they've been stuck right in the middle of. So I think, if anything, if we do get a Biden victory and some of that pressure eases, then the pressure that HSBC and China will be feeling should also dissipate. But it's certainly, there isn't a financial institution in the world that is more stuck between the trade war that was raging between the US and China.
John, I look at HSBC and the story of it all, and at the end of the day, they have to compete against other banks, and yet there's a mystery to that. Who are they competing against? Is it Standard Chartered, or is it a more broader set of banks?
Well, if you ask them what their peer group was, they'd cite a JP Morgan, a Citigroup. I mean, Standard Chartered is a big emerging markets bank, but take Hong Kong, I mean, HSBC's got by far the biggest market share. So in China, it's the mainland Chinese banks. For sort of global trade, it would be a Standard Chartered or a Citigroup. In the UK, obviously, it's Lloyds and NatWest. So you've got to look at which region you're talking about. And clearly, they're pulling out of France now. So it's basically UK, Global Trade Bank, and Asia from a Hong Kong base.
It's the oddest thing. We could go on for this all day. We'll continue this discussion. Mr. Tice, of course, writing brilliant notes for Bloomberg Intelligence on banking. Red and green on the screen right now, and of course the challenges of the market yesterday. The new volatility with the VIX actually higher fractionally, 32.67 today. You know, I look, Francine, at this and the markets, and you just want to find a bid here, but with the news flow in the election, we'll have to see.
Yes, it's election, and also, you know, the Brexit may move the UK into different policy territory, so there's quite a lot going on. But you're right, the election, I guess, a lot of stocks are down today, not only because of earnings that were disappointing, but just because hopes have really faded, Tom, that we're going to get a stimulus before the election. And a reminder, we're only 7 days away from that all-important U.S. election.
Well, it is gone. This is a thrill. We're going to have David Rosenberg with us. Obviously, Rosenberg Research, his slicing and dicing of inflation is definitive. But David Rosenberg here on how he melds his economic view in the two Americas into the election and into an investment stance forward. David Rosenberg will join us. This is Bloomberg. Good morning.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it. This morning, the humanity, the carnage, the S&P 500 down 5%,
The NASDAQ 100, a lofty 7, making 8% down. All that back to Valentine's Day, pre-pandemic. The 10-year yield unchanged from March 6. We consider a post-inauguration stock market. 7 days in May, what will post-election stimulus look like? 7 days to the election, what are Trump and Biden and Trump, what are they doing today to win next Tuesday? And then there were 9. Amy Coney Barrett replaces Ruth Bader Ginsburg. Good morning, everyone. Bloomberg Surveillance. Tom Keene in New York, Francine Lacroix in London. Of course, all revved up, 7 days out. Lots to talk about here, but a lot in the United Kingdom as well. And I'm sorry, Francine, to me, it is the pandemic and the way that they're working with that right now.
Yeah, Tom, it's the UK, it's Germany, it's France, it's Italy. Look, if you're a European politician and you've promised for the last 4 months that you're not going to go back into lockdown and the number of cases are going up, you're stuck. And if you go back into lockdown, you're going to have people revolting. But I'm more interested in China, Tom. So we broke that story about 5-6 minutes ago, saying that actually they're looking, and this was a Reuters story, they're looking at a little bit more when it comes to renminbi. The one thing I would point out too, Tom, and I did spend a good amount of time on Sunday looking this up, is that actually on Sunday, China clearly said that it was trying to push to have a bigger international for yuan. This means more PBOC support. And so the latest headlines from Reuters that we broke just a couple of minutes ago saying that China will remove the counter-cyclical factor in yuan fixing may point into that direction.
Very good. We've got other plan as well. This is important. This is a Wall Street headline. The Securities and Exchange Commission, it will halt. It will shelve its plan to let hedge funds conceal stock holdings. That's a big decision. That's just breaking now across the screen, and we'll have to see where that leads as well this morning. Futures up 6, Dow futures up 20. We'll do the data check here in a moment. Right now, with our first word news in New York City, here's Ritika Gupta.
Morning, Tom, Francine. Amy Coney Barrett has been sworn in as a Justice of the Supreme Court. The first of 2 required oaths was administered not long after the Senate voted 52-48 to confirm her. Every Republican but one voted in favor. Chief Justice John Roberts will administer the second oath today at the court. Barrett's confirmation solidifies a 6-3 conservative majority. The record coronavirus surge that started with young Americans has now reached the oldest populations. According to the CDC, counties with the largest 65 and older populations now have an average 19 daily cases per 100,000 residents. That's 67% higher than a month ago. And China ramped up its purchases of American goods last month. Still, it's far from the full-year target set out under Phase 1 of the trade deal with the U.S. The Chinese bought more American oil, soybeans, and cars. With 3 months to go in the year, Beijing is a little more than a third of the way towards the goal of $170 billion in U.S. imports. In the UK, Prime Minister Boris Johnson faces a revolt from more than 50 of his own Conservative members of Parliament. They're demanding a clear route out of lockdown for parts of northern Britain that helped give him a majority in the last election. The lawmakers told Johnson his strategy of targeting local areas with restrictions was disproportionately damaging the economies of northern regions. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Ritika, let's look at the data here, and we do data here in transparency at Bloomberg on that hedge fund story. This is a huge deal in that there was an idea here of masking stock holdings of hedge funds down to 100 million and up to a very large 3.5 billion of assets, and that has been pounded by a claim of the public. We'll have much more on this. Ben Bain and Robert Schmidt reporting for Bloomberg. Hedge funds shot at stock secrecy fades as SEC shelves revamp. That's an important story for global Wall Street today. Important as well as the rebound or the lack thereof. We're going between red and green on the screen and a little bit futures up 6 right now. Yields don't do much. The rest of the market churning here of what we said today. I like, Francine, what Patrick Armstrong earlier said about gold, 1901 the ounce. Francine?
Yeah, so Tom, just a little bit more. This will have repercussions. You know, the fact that the SEC has shelved these plans. Just a reminder, I think you've mentioned it, Tom, but the plan, as Danny Berger rightly reminds me, the plan would have increased the threshold of who would have to file from $3.5 billion from $3.5 billion to $100 million. Now, overall, if I look at my data check, a lot of everything that's going on, of course, has to do with earnings. A lot is also with renminbi and the fact that we heard just a couple of minutes ago from China for possibly some of the plans for yuan fixing. But European stocks are still dropping. U.S. futures are actually a little bit more optimistic. We had HSBC and Santander both signaling a brighter outlook for dividends. Crude oil a little higher. Treasuries and German bonds steady, Tom.
Very good. Right now on politics, Kevin Cirilli is tanned and rested, our chief Washington correspondent, as we consider 7 days on as well. Kevin, how have the strategies of the two candidates changed in the last 24 hours? What's the nuance of a Biden adjustment and a Trump adjustment?
Well, two things. First and foremost, the Biden campaign has really been sticking the course. I mean, Joe Biden has not been holding a packed campaign schedule akin to President Trump. And that's the other point here. President Trump ramping up his rallies. He had 3 rallies in Pennsylvania yesterday. He's got up to 5 and 6 rallies planned per day. And this is the same strategy that he deployed back in 2016.
Well, okay, it's the same strategy as well as 2016. Based on what you see in the polls, there were like 84 polls out yesterday. It's hilarious. Based on what you see in the polls, is there any indication the president's strategy is working? Is he closing the gap?
Well, look, yes, in terms of Pennsylvania as well as Florida, it's a razor-thin margin. And so I think what you're seeing is that Democrats feel incredibly confident in the state of Pennsylvania. Florida is still very much a toss-up. I think when you've got Senator Kamala Harris, the VP nominee for the left, going to Texas, which is a political Hail Mary of sorts for Democrats, they've always wanted to flip Texas. The question will become in the postmortems of next month, whether or not they should have focused on battleground states as opposed to try to expanding the map. And so I think it's a lot of unknowns. It's the sprint up to the election. But in terms of the strategy for President Trump, he's got to win back some of the Rust Belt coalition that he really lost ground to in 2018, as well as with suburban women voters. And for Joe Biden, he's got to attract those Rust Belt voters that Hillary Clinton wasn't able to turn out in 2016.
Kevin, there's a Rasmussen poll, and for the first time in over a month, you know, Trump is leading nationally. It's one poll and only one poll, and it was sent to me by a viewer. But what do I make of it?
Well, look, Rasmussen is typically has been the outlier poll. However, it has also been incredibly savvy in terms of how it's been able to predict the Republican turnout and the Francine, this sense of the Republican base and their enthusiasm is the right word here. And so that's where really this comes down to. Enthusiasm. Are the Republicans enthusiastically going to turn out and show up and cast their ballot on November 3rd in an election, mind you, where 50 million Americans have already cast their ballot? So that's really the big question mark, the big unknown. Are issues like the coronavirus going to be driving voters to the poll? Is that going to be the #1 issue, or is it going to be the economy? And that's just, quite honestly, the biggest question mark heading into the election.
So at this point, Kevin, President Trump could still get a 2-term. Is it a 2 chances in 10? You know, what's the probability of that?
I will politely dodge your question. But I will say this. I don't think anyone is counting out President Trump on the left and nor the right. I think that he did it once. Republicans that I talk with feel that he still, that his back's up against the wall. This is when he bulldozes through. The Democrats are suggesting that they can pull off an upset. I think the biggest question mark, though, on the left is what kind of president Joe Biden would be on a host of different issues. And quite honestly, he didn't really answer those questions in the past week or so, or even in the 60 Minutes interview. And maybe it's by design, but here in Washington, D.C., which is, you know, the recalibration game, many sources that I talk to are trying to figure out what a first 100 days for Joe Biden would look like.
In the zeitgeist, Kevin, what I see is a desire to figure out the marginal Hispanic vote in Florida. How does Mr. Biden do that? For him, it's critical. How does he go after that marginal vote?
Well, he's got to have them turn out, but he also has to have this understanding that there is the Catholic vote amongst the Hispanic community in Florida, Tom, that typically has always leaned more Republican. I mean, you go back to 2000 and 1999 for that. But in the terms of getting them to turn out, I think that it's this issue of economics. I think it's much less democratic socialist issues for beyond the Catholic Hispanic vote, and it's much more economics. I mean, for many in that state, they're underserved community.
Kevin, thank you so much. You do look tanned and rested, which is a good and beautiful thing. Kevin Cirilli, our chief Washington correspondent on the 7-day dash to next Tuesday. Greg Villiers publishing moments ago, making very clear he's still considering, we won't know where we are at 2 p.m. Wednesday, 2 a.m. I should say, Wednesday morning. Coming up, we'll drive forward the political conversation here with futures up 7, Dow futures up 33. Mr. Munson will join from BGR Group. Stay with us. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan. We did see some pressure on the futures. That is now being reversed.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Good morning, everyone. Bloomberg surveillance following a number of stories this morning. China makes an adjustment on yuan, and we see a weaker yuan. One of the many stories. Google just out with a pretty polished PR statement on the election. They're going to work with Associated Press on election results for what that's worth. But also looking at just the market turmoil. Futures up 8, Dow futures up 32. Synthesizing that is David Rosenberg. He is with Rosenberg Research, of course, acclaimed at Merrill Lynch just a few years ago, in slicing and dicing inflation and folding it over into market reaction. David, let's begin with the inflation vector now. It is discrete and different than Europe, with a rising five-year break even. Do you assume a trend towards rising and larger inflation in the next years to come?
I have a tough time believing that inflation is going to become a sustained problem, at least for the next, I'd say, 1 to 3 years. The output gap, or the differential between where aggregate supply and aggregate demand is in the United States, is far too high for me to be worried about inflation. I know that it's become a bit of a narrative of late with the steepening yield curve and the increase in the break-even levels. my forecast is a little bit different, I think, than the consensus is on this. It doesn't mean that we're not going to go through a temporary period where some of these cost pressures in the material sector seep through. That's been the case. But remember, inflation is a process. It's not, you have to have continuously accelerating prices, not just a one-off level shift. And so I think that the market has overdone it. I certainly think the narrative has overdone it on the inflation side. I think it's going to be years before we see.
Okay.
I think it's sustained acceleration.
Okay, David, look, I lost my eyesight reading your stuff at Merrill Lynch years ago as you sliced and diced goods and services inflation. Now the basic theme is it's different because service sector is such a mystery in this pandemic. What is the price persistency of a service sector in collapse in a natural disaster like this pandemic?
Right. Well, I think that that's really what's flipped things around this time. Normally in a recession, service prices are sticky and you get the deflation in the commodity areas of the CPI or the PC deflator. This time around, it's been flipped. I'm not a believer that we're seeing sustained increases out of the material side. I think that is temporary. Supply side, somewhat related to the Chinese economic recovery that we're seeing. I'm not looking at commodities as being a sustained source of inflation. The services side is very interesting because when you look at, say, the CPI, 30% of the index is related to residential rents. 40% of the core is residential rents. I don't think that people have really thought through that the commodity sector is really a two-bit player in this, that really the dominant feature here is we're going to go through in the next several years a massive increases in vacancy rates in the apartment sector, going to drive down residential rates on a sustained basis, and that's going to come to overwhelm everything else that's happening in the price indices. Who else
David, I'm looking at
that? Everybody's just focused on the CRB index. They're not really looking at what is dominating here. It is about rental rates.
But David,
are already in the process of disinflating, and that's going to dominate what's happening on the inflation side. That's why I think the break-evens are totally out of whack with what I see happening over the course of the next 12, 24 months.
I'm focused on China. Industrial profit is up. Consumption is up. Could we import inflation from China?
Well, I mean, you could argue that we could import some inflation from China from the fact that their growth is stimulating demand for commodities. But, I saw, you don't walk into Walmart and go down an aisle and buy a pound of copper. The inflation thrust from the commodity sector to a service sector-driven economy like the U.S. is really, really small. So the way you import inflation from any country is really on tradable goods. But that's really a small part of the inflation picture. It certainly is nothing compared to what you're going to be seeing on the services side, as Tom had mentioned just about a minute ago.
Yeah, David, I don't know. I go on aisles. I don't buy copper, but I buy everything else. It's usually plastic and made in China for the kids. Talk to me a little bit about some emerging market currencies and how they would actually move and change depending on who becomes president, after the vote in a week from now.
It's really tough to say because I've never found that any particular president has any say over where the currency goes. And I think the U.S. dollar right now, look, there's lots of reasons to be bearish on the U.S. dollar, but it's already come down quite a bit. But I don't find that who takes the White House really matters. And when you really think about it, one of the reasons why the stock market has had some second thoughts on the blue wave is not because Biden's going to lose, but because people are thinking, is the Senate going to flip? And it probably won't. So it doesn't just matter who takes the Oval Office. It also matters the overall configuration of the executive branch and the legislative branch. And then when you think of currency markets, whether you're taking a look at emerging markets, which are not a homogeneous entity, the question becomes in currencies. You see, currencies are not like a bond or a stock. You have to value them on a relative basis. It's a pair trade. So it's also benchmarked against what's happening in other parts of the world. But I would hazard to say that I do think the U.S. dollar, no matter who takes the White House, will be on a weakening trend against a lot of these emerging Asian currencies because they handled the pandemic so much better. They didn't blow their brains out on fiscal policy nearly to the extent that the U.S. has, and they're going to come out, along with China, a lot more quickly. So there is a bullish case. And answer your question, insofar as what it means for emerging Asia, and you're already seeing it in the yuan, that those currencies will be relatively strong for the next year, in my opinion.
David Rosenberg, thank you so much. Greatly appreciate it. Mr. Rosenberg, Rosenberg Research founder and also from Canada as well, with a great commodity perspective. Speaking of commodities coming up, this is going to be a really important conversation with oil. West Texas, $38.99, gold, $19.03 the ounce. Mr. Curry, Jeffrey Curry of Goldman Sachs, our global head of commodities, always informative. This is Bloomberg. Good morning.
Just days away from the most critical election in U.S. history and its only democracy at stake. From electronic voting machines to misinformation and fake news and political advertising on social media, is the tech industry ready for its biggest test yet? I'm Emily Chang, and we'll be focusing on these issues all week on Bloomberg Technology in a special electioneering series. Tune in 5 p.m. Eastern, 2 p.m. Pacific, only on Bloomberg Television.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. HSBC signaled it may resume limited dividend payments for this year. British lenders have been pushing the Bank of England to lift a ban on payouts. Meanwhile, HSBC posted higher than expected third quarter profit, but it still faces a number of problems. Amongst them, loan losses from the pandemic, falling interest rates, and political tension in Hong Kong, its largest market. Bloomberg's learned that Sheldon Adelson's Las Vegas Sands is exploring the sale of its casinos in Las Vegas. A sale could fetch $6 billion or more, and it would leave Adelson focused on Asia while marking his exit from the U.S. gambling industry. The U.S. makes up a shrinking part of Adelson's business. It accounted for less than 15% of revenue last year. The general counsel and head of litigation at Goldman Sachs have been accused of covering up sexual harassment. His subordinate filed the suit, saying she was forced out after she spoke up about the sexual harassment of another female lawyer in the group. Goldman says the allegations are without merit. And that's your latest Bloomberg Business Flash. Tom Francine.
Thank you so much, Ritika. Now, this is what we're looking at in the markets here in Europe. A lot of the focus, of course, is on earnings. HSBC, Santander, both beating earnings estimates. Now, this is what else I'm looking at. If you look at, for example, some of the biggest drug company reporting, it's a bit of a mixed fortune. And then, of course, there's this relentless spread of coronavirus that's impacting a lot of stocks as well. Crude, higher a touch. German Bund's pretty much steady, Tom.
A little bit of a lift right now. We had red and green an hour and a half ago. Right now, futures up 9, Dow futures up 37. Even the VIX turns around ever so slightly. We'll take it from a lofty 32 down to 32.44. We'll take everything we can get right now. Flat on yield, 0.80% in the 10-year yield. Dollar churning flat, no other way to put it. Yen is of note. Yen has stayed under 105 through all this, with euro-yen, that pro pair showing strong yen versus weaker euro, and the euro 118.07. That triangulates. Turkish lira with an 8.16 an hour ago. Again, does a little better, but it has been an extremely challenging 3 or 4 days for Turkey there. Of course, the bouncing back and forth between Mr. Macron and Mr. Erdogan is well. I want to say something about our political coverage. Kevin Cirilli, of course, following everything. Craig Gordon in Washington, leading up our print coverage as well. And David Weston spearing forward these next 7 days with balance of power. And of course, we'll go to our election coverage here through the weekend and into the first Tuesday of November. On that perspective from Lester Munson of BGR Group and the principal there, an interesting twist here on the strategies forward. Stay with us from London, from New York. This is Bloomberg.
The Boston Symphony Orchestra presents BSO at Home. While you stay inside, enjoy a curated collection of archived concerts and behind-the-scenes stories from BSO musicians. BSO Homeschool provides lessons for music lovers of all ages. New performances and messages from musicians are added regularly. Enjoy these selections and much more at bso.org/at-home.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
COVID. That's all they talk about, the fake news. COVID. That's all they talk about. What progress we've made on it, too. We understand it. We know we have to protect our seniors, especially when they have heart, when they have diabetes problems, and we are protecting them. We have the best testing in the world. That's why we show so many cases, because we do more testing than anybody else. But we're doing great, and, excuse me, here I am, right? I'm here for you.
The bottom line is Donald Trump is the worst possible president, the worst possible person to try to lead us through this pandemic. And I don't think he just either doesn't have any idea what to do or he just doesn't care.
The campaign, and it is interesting, and we speak of the Trump and the Trump supporters, and of course Mr. Biden, and a lot of focus on the shades of the Democratic experience, but what about the Republican experience? It is most interesting, and maybe you can define as old line Republican, the B and the G and the R of BGR Group. And of course, the B is the wonderful Haley Barber. We're thrilled that he's attended our show any number of times. With the privilege of working for the gentleman from Mississippi, Lester Munson joins us right now on government relations and, of course, on the middle ground for Republicans. Lester, I'm absolutely fascinated with the great unspoken, which is how does the Republican Party regroup with a Trump victory or with a Biden victory? What does the old line, the mainstream Republican Party do the first Wednesday of November?
Well, I think if it's a Trump victory, they're going to have to make a tough decision about biting the bullet and joining kind of the Trump wing of the party or becoming Democrats. If Biden wins, and I think there's going to be a great gnashing of teeth in the Republican Party, there's going to be a lot of vindictiveness. There may be some blood in the water. Hopefully that's resolved quickly and the party can reformulate itself on the Hill and with a new candidate for 2024. So there's a lot of interesting things ahead for Republicans.
Part of it is the representation of your area, which is the State Department and foreign policy. What is the distinction you see if we rebuild the State Department? How will that occur under a Biden presidency?
Well, Biden is a much more mainstream, traditional, kind of Washington-oriented politician. Of course, he's been there for almost 50 years. He knows foreign policy. He's got a team of folks who have worked with him for years. Everyone who works in foreign policy has some familiarity with Joe Biden. I think there's not a single person who doesn't know him somehow. So he'll come in with a lot of credibility and a lot of familiarity. And that might make it easy for him to kind of recraft things in a Biden way forward. That's if he's able to grab hold on the Hill, if he's got support in the Senate to be able to do the things he wants to do. But the table could be set for him to do some interesting things on foreign policy.
But Lester, what would Joe Biden as president do in the first 100 days? Would it be focusing on foreign policy, or is it something more domestic? Do we know?
Well, I think he's going to have a very domestic-focused administration. That's certainly what he's been talking about. He's going to be very focused, it would appear, on coronavirus, on having a different kind of response than the Trump administration has had. I think he'll be pushing out public health experts more than President Trump has. I think that's a very good guess. On foreign policy, though, I think he'll also take a number of steps to shore up alliances, visit with our traditional allies in Western Europe, in the Far East, and do the things, and even with our neighbor to the north, Canada, do the things that President Trump just wasn't quite willing to do, those traditional photo op summit type events.
Mm-hmm. Lester, does President Trump still have a shot at this? I mean, we're 7 days away. Could he actually get a second term?
I actually think he could get a second term. I think it's going to be very close. I think the numbers look very similar to 2016. We've always known that Donald Trump has underpolled where his real support is. That's certainly what happened 4 years ago.
the numbers look very similar. If you look at the battleground states, they're very tight, and a shift of just a couple of points could throw this to the president.
Lester, what does a president not need to do in the next 7 days? What's he need to avoid?
Well, I think he needs to avoid probably any new disclosures of malfeasance or misfeasance or bad behavior on his part, anything that undermines what support there is for the president. His favorability rating is actually a little bit high for him. He started off 4 years ago at 37. He's now at 43. He's going to want to keep that going in a positive direction here in the last few days. He's got to show some energy. He's got to show that he's recovered well from coronavirus and contrast himself with Joe Biden, who has a little bit of a slower pace and who hasn't been quite as aggressive.
But Lester, what I don't understand is that if you look at the polls, I mean, you know, the Democrats could take Texas. The Democrats could actually take Georgia, and we're also, you know, looking at Ohio. So how does the president still have a shot at this?
Well, I think the numbers in Texas they look close. I think they're more favorable for Republicans. I'd rather be a Republican in Texas than a Democrat. Georgia will be very interesting to follow. There's 2 Senate races there that could determine which party controls the Senate, which of course will be huge next year. No, but it's very tight. I think right now the Democrats are in a better position. If the election were right now, they would likely win. We've got 7 more days to go. Trump needs to gin up enthusiasm among his base, get out those non-college educated, mostly white voters who don't normally vote. That's his key. He's got to drive those folks to the polls. He's not trying to persuade independents. He's trying to persuade Trump voters who haven't really voted yet or haven't voted before. That's his mission. So those polls, I think, are a little bit illusory. Again, I think it's going to be very close. Democrats probably have the upper hand right now. The president seems to be surging a little bit.
Lester, thank you so much. Lester Munson with BGR Group. Really interesting there. Something we really have not covered all that much. The Republican dynamic of Mr. Trump, his dominance over the Republican Party. This is a moment of history for Silicon Valley. If you think of David Packard, of Mr. Hewlett, of the history of San Jose and all of Stanford and Berkeley in the decades there is a merger. AMD will purchase Xilinx. It is a 4-mile difference from Santa Clara to San Jose. And for those that remember the burgeoning semiconductor business and all that it's been for decades, this is a really important transaction. It is $35 billion. It's only 11,000 employees, taking out about 5,000 employees. But it is truly an historic moment for American technology. AMD, with a lower margin, will buy the profitable Xilinx. This is Bloomberg. Right now, let's go to our First Word News. Here's Ritika Gupta.
Thanks, Tom. It's a big win for President Trump and congressional Republicans on the eve of the election. The Senate confirmed Amy Coney Barrett to be the newest justice of the Supreme Court. That solidifies a 6-3 conservative majority. Barrett may be asked to weigh in on cases that could determine the outcome of a close election. The paused clinical trial of an Eli Lilly experimental antibody therapy won't resume. Federal researchers concluded the drug probably wouldn't help hospitalized coronavirus patients with advanced cases. Still, other trials are ongoing to see if the Lilly drug can help patients earlier in the disease's course. A labor union is suing President Trump over an executive order that makes it easier to fire federal workers involved in policy-making decisions. The National Treasury Employees Union represents 150,000 federal workers. Critics say the order is a way for the president to require political loyalty from civil service workers. And the Trump administration has taken another step certain to make China angry. The State Department has signaled its approval for a potential $2.4 billion sale of an anti-ship missiles to Taiwan. China and the U.S. are already at odds. Yesterday, Beijing imposed unspecified sanctions on Boeing's defense unit, Lockheed Martin and Raytheon because of a previously announced arms sale to Taiwan. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Francine, Tom.
Thank you so much, Ritika. Now, coming up next, we track COVID-19 with Amesh Adalja, the Johns Hopkins Center for Health Security Senior Scholar. We look at lockdowns, we look at restrictions, we look at COVID-19. This is Bloomberg.
What would you say that the CDC or the FDA or the White House or HHS should have done differently?
Almost all of us have underestimated the dramatic impact of this outbreak.
I understand there's a huge, I think, allure of rushing out with a vaccine. But the other thing we have to remember is when we go too fast, we can also disrupt the ability of clinical trials to occur for even better vaccines down the line. So we've got to strike this balance of making sure that we don't undermine the larger scale effort in our rush to get something out.
Well, that was the chief executive of Novartis speaking to Bloomberg a little bit earlier on. Now, we continue to track the virus, and Bloomberg has developed, of course, a unique partnership with the leading authority on COVID-19. Johns Hopkins has been at the forefront of the international response, and every day we bring you insight from experts in public health, infectious disease, and emergency preparedness. Well, joining us today is Dr. Amesh Adalja, Johns Hopkins Center for Health Security Senior Scholar. Thank you so much, Doctor, for joining us. When you look at COVID-19 and the fact that certain people, are just fed up with restrictions or lockdowns, what can you tell them about the number of hospitals in the U.S. but elsewhere that just cannot cope with the number of sick arriving?
This is starting to tick up, and there are multiple states in the United States, including Wisconsin, both North and South Dakota, as well as Utah and parts of Texas, where hospitals are unable to cope with the number of patients that they're getting. And what that means is that not only will they have to deal with a lot of COVID patients, but that impacts all their other operations, meaning their heart attack care, their trauma care, and that makes everybody's health go down. So the key thing is, even if you have pandemic fatigue, the hospitals still have to take care of patients with COVID, and we want to make sure. That's what bending the curve was all about, or flattening the curve, was trying to keep it below hospital capacity. And sadly, many places in this country do not have the capacity to deal with these cases. And the same is true in Europe, for example, and that's when you see public health interventions being made. So our goal is not to get the cases to zero. That's really impossible. It's to keep them to a pace that's manageable by the healthcare system. And in order to do that, that's the common sense recommendations that you keep hearing about, as well as a plan for testing, tracing, and isolating.
The people that are packing hospitals, and of course El Paso, Amesh, is taking the headlines here, terrific challenges on the southern border with Mexico. The people in the hospital, how sick are they? As a general statement, Obviously, they've got the virus. Obviously, they're ill. But how ill is ill for a typical hospitalization?
A typical hospitalization involves usually somebody that doesn't necessarily need to go to the intensive care unit, but requires oxygen, maybe through nasal cannulas or maybe through a different type of delivery mechanism. So they're sick enough that they can't cope at home, meaning that they need to be in the hospital to be monitored, to watched, because some of those people do get worse and end up in the ICU. I would say in October of 2020, the average patient in the hospital is less sick than in March of 2020. We are getting better at taking care of these patients and intervening earlier so they don't get as sick, and people are probably getting infected with less virus because there's so much social distancing, so much facial covering use that what we call the inoculum is lower. This is a hypothesis that needs to be worked out, but it does seem that they're less sick, but that doesn't mean that we're still not getting over 1,000 people dying, that this still isn't a deadly disease that we have to take very, very seriously.
If someone's had the virus in March, April, May, June, if you catch it again, is it going to be less worse than the first time, Amish? And overall, you talk about the viral load. Is it also because it's a different kind of population that's now being hit that we're seeing less hospitalizations?
It's a little bit of both. So reinfections are very rare. There's only been about a handful documented, so we can't really say whether or not when reinfection occurs, whether it's worse or whether it's not worse. With other coronaviruses, it's usually very mild when you get reinfected, but there has been at least one case where it was worse with this coronavirus. But again, this is something that we only have very small numbers, so you cannot make any kind of real scientific statement about it. It is true that the demographics of the pandemic has changed. We are seeing younger people be more infected, and that makes sense because they tend to be more risk tolerant. They're the ones that are going to taking part in sports, for example. They're the ones doing small gatherings, and vulnerable populations are still sheltering in place a little bit more to a bigger degree than younger populations. And younger populations are generally not those that are going to need hospitalization. So that is somewhat skewing some of the data because the demographics have changed. But it is true, though, that there are vulnerable populations that are still getting infected, and they are the ones that are in the hospital. They are the ones in the ICU, and they are the ones dying.
So vaccine trials have resumed. How quickly can we actually get a vaccine that can be distributed and used by a good chunk of the population?
For a good chunk of the population to be able to get a vaccine, it's likely going to be mid-2021. At the best case scenario, we might have an emergency use authorization for one of the vaccines prior to the end of the year, but that's really only going to allow it to trickle out to healthcare workers and maybe some high-risk individuals. You have to think about the scale of getting enough doses of the vaccine available to meaningfully impact the virus. That's a long time, and this is going to be a 2-dose vaccine with a lot of logistical challenges because it needs to be kept at a very cold temperature. So I do think we're going to be battling this virus without a vaccine well into 2021.
All right, thanks so much for joining us, Amish Adalja there of Johns Hopkins, and be sure to check out VRUS Go on the Bloomberg terminal for the latest information. You can also tune in every day for our exclusive conversations with Johns Hopkins experts for an inside look at battling COVID-19. Now, later on Bloomberg Surveillance, Eli Lilly Chairman and Chief Executive David Riggs. That's also a conversation on antibody testing. That's at 7:30 a.m. in New York. That's 11:30 a.m. in London. And this is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
That over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Rishka Gupta with your Bloomberg Business Flash. A big takeover in the semiconductor business. Advanced Micro Devices has agreed to buy Xilinx for $35 billion in stock. That takes the chipmaker into more diverse and profitable markets. It also adds to AMD's data center offerings. AMD estimates it will take about 18 months to win approval from shareholders and regulators. Santander has bounced back. The Spanish bank rebounded from its worst ever quarter with a profit that beat estimates. Now it's trying to convince regulators that it's strong enough to resume paying dividends.
A general ban on dividends has proven to be negative for the sector. So I think it's also at the same time very difficult to differentiate amongst banks because you can put an undesired, let's say, negative perception on some institutions. So what we believe is going to happen is that they will allow for a small but a general dividend payment for the sector as a whole.
And that's your latest Bloomberg Business Flash. Francine?
Thanks so much, Ritika. Now, SAP's dire earnings results sent a wave of fear across the business software space. That was yesterday, and the Salesforce chief executive, Mark Benioff, says SAP's troubles are unique to them. Now, in an exclusive interview with Bloomberg, he argued that SAP has not maximized the cloud opportunity.
We just delivered a phenomenal quarter, more than $5.15 billion in revenue, our highest operating margin ever at over 20%. It was actually 29% growth quarter. I think that SAP, you can see they're having very significant troubles with the CEO transition that they're going through. They, as you know, moved from one CEO to two, then they fired one of those two CEOs. The CEO transition is just not going well. And their customers are saying that. And now you can see that their revenues are also reflecting this trouble.
Yeah, some of that surprising number was a poor cloud backlog. Would you say that perhaps some of that market share Salesforce has taken?
Well, I think that they have not executed the cloud opportunity well. Of course, Salesforce has phenomenal market share in CRM. We are the customer success company. We help companies connect with their customers in whole new ways. And that's our main focus. You can see that with our tremendous customer base, whether it was companies like AT&T or Johnson & Johnson or amazing technology companies like Cisco have all transformed themselves, digitally transformed themselves using Salesforce. That focus has served us well. We're number one now in CRM. You saw the new IDC information that just came out last week. Our market share continues to grow. And look, this has been an amazing time. It's a year that none of us could have possibly expected. And in technology, every company is going through a massive digital transformation, and that transformation is accelerating. And SAP's troubles, I think, are unique to them.
You've eliminated about 1,000 jobs earlier this year, and those included customer support roles. So will you be rehiring? What are your plans on that front, given, as you say, the strength of your results?
Well, we're actually adding more than 4,000 new jobs in this current 6-month period. We'll add 12,000 jobs this year. As part of that, we will shift about 1,000 of our positions. Don't forget, Salesforce has 54,000 employees worldwide. We're constantly making changes to our employment base. We continue to grow very aggressively in all geographies, and we're very excited about the transformation that the company has gone through this year.
So how much of that strength is coming specifically from Asia, given that they're emerging from this pandemic faster than anybody else?
Well, I was in Asia last week. I went to Singapore, and it is amazing the difference between Singapore and the United States. I mean, in the United States, everything is closed. Everyone is going through unbelievable difficulties. The pandemic is hitting record case numbers. In Singapore, they had no new cases while I was there. Every restaurant was open. Every business was open. Every store was open. And we can learn a lot from Asia. We can learn a lot from Singapore. We can learn a lot from Japan on how to handle these pandemics. Now, of course, this is not their first pandemic in Singapore or even in Japan. So they have learned before, and they're executing their playbook. But in the United States, we're just having a lot of troubles.
Not the first pandemic in China either, and you've entered business with Alibaba's cloud business last year. Just give us a brief update on how that's going. Where are you seeing strengths and perhaps some challenges?
Well, I'll tell you, Daniel Zhang, he is the CEO of Alibaba, and when this pandemic hit, he has been a tremendous friend and partner of us. He helped us procure more than 60 million units of PPE, and that has now gone to over 300 hospitals in the United States and actually around the world. And we could not have done that without our partnership with Daniel and Alibaba, and we will be eternally grateful.
Well, that was the Salesforce Chief Executive Officer, Mark Benioff, speaking exclusively with Bloomberg's Sherry Ann. Now, we need to look at the data. Let's have a quick look at the markets, but also tell you about a big deal that's out there. Now, Tom brought it to you about 15 minutes ago. First of all, European stocks are still dropping. Again, we had some drug companies actually reporting earnings. If you look at Pfizer and Merck, that came out in the last couple of minutes. Pfizer revenue pretty much in line with expectations, and actually Merck a touch below. The other story I want to show you is basically what Tom was talking about, which is AMD agreeing to buy chipmaker Xilinx for $35 billion in stock. This is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa